Hi friends, in the next 15 to 18 minutes, I'm going to explain to you 5 mega trends that could very well have a massive impact on your portfolio performance in the next 10 years or so. A mega trend is a trend that is likely to grow faster than the broader economy and the broader market. It's a very important video. Please do not skip it because I'm going to compress a lot of data backup points in just 15 to 18 minutes. Let's start with the first one. First one is capital market and wealth management theme. Let me present to you 4 data points that will clarify why capital market theme is likely to be a mega trend for the next 10 years or so. First data point that you see on my screen is India's gross domestic savings. So if you look at 25 years of data, you will see that our gross domestic savings have been around 12 trillion US dollars. But in the next 25 years, it's going to go up by almost 8 or 9 times to around 103 trillion US dollars. India's per capita income is rising and therefore savings are likely to go up. And where will this money go? That brings me to my point number 2, which is the money is likely to flow into stock market, direct stocks or mutual funds. Have a look at a very interesting pattern that we have seen from FY12 to FY24. In FY12, only 2% of India's household savings were kept in mutual funds and direct equities that have gone up to 16% by the end of FY24. And by FY33, it is likely to further go up by around 24%. So there is definitely like to be a good momentum in this particular space. Third data point, which is what is the volume and transactions happening on exchange. So look at FY 2010, around 218 lakh crores of value transactions were happening. It's gone up by almost 176x and that has crossed 38,000 lakh crores as of FY 2026. Huge volume, huge transactions are happening on the exchanges that we have seen in the last 5 years or so, especially after COVID. And here is my fourth and the last data point. Then we'll come to index funds and ETFs, etc. What you see is our population, 148 crores of people. And as of now, only 12 crore people are investing in direct stocks. And there are only 5.5 crore mutual fund investors. So the opportunity is huge here because even if I consider internet users, which are around 103 crore people, there is a potential possibility of a lot of these people start to trade, start to do SIPs, start to do mutual fund investment, etc. So the runway from here on is very long, with a potentially good growth rate coming up in the next 10 years or so. Now let me take a pause here and ask you, what do you think about the capital market theme in India? Let me know in the comments. I would love to hear and read your comments in terms of what is your view on this particular theme. But whenever you want to track this particular theme, you have to track an index called Nifty Capital Markets Index. And as of July 2026, you can see which type of companies have been included in this particular index. For example, BSE like exchange, MCX exchange, HDFC asset management company. So you have AMCs as well. You have wealth management companies like Anand Rathi Wealth. You can see the brokers as well, Angel One, etc. You can see the diversification here, that it is not concentrated on just AMCs here. In fact, you can see 37% as of now is in exchange. Asset management companies have 23% and so on and so forth. You can go and see the large cap, mid cap and small cap distribution as well here. Now, if I talk about the past returns, who is saying that Indian stock markets are not performing well? Look at this particular index, capital market index. As of July 2026, last 1 year, if you look at it, it's gone up by 23%, right? I know Nifty has not done anything, but this index has done phenomenally well. It has created wealth already in the last 1 year. Look at the 3 years, look at the 5 years. Again, I'm not trying to say that we are likely to make these kind of returns in the future. Absolutely not a point that I'm trying to make here. But my point is that if you play the themes rightly, then of course there are good opportunities even in Indian stock market, even today. It will be there tomorrow. It will be there forever. You have to just find out the themes where the money is flowing. Okay. Now coming to what sort of index funds, mutual funds can you go and study, explore the ETFs, index funds, etc. So on my screen, you see 4 index funds. First of all, Tata, Motilal Oswal, Axis, Grow, Nifty, which is a fund of fund. None of these are recommendations. These are all there for you to go and study. What I've done is I've arranged them in the order of highest to lowest AUM that you can see. I've given you the expense ratio as well here for all the 4 funds, given you the tracking error of all these 4. You can go and study these further. I'm not going to go and give you exact details of their Sharpe ratio there, every other detail. If you are interested in ETFs, then there are 3 ETFs you can go and study: Motilal Oswal, Grow and Edelweiss. Edelweiss is capital market and insurance. So it also includes insurance as a sector. Again, I've given you the market cap, expense ratio, and tracking error of all the 3 ETFs here. Given you the 3 months average volume here, because in ETFs, we have to look at the volumes to ensure that there is enough liquidity. Okay, so you can see those volumes here as well. None of these are recommendations. The reason I presented to you these index funds and ETFs is so that you can go and further study these at your end if you like this capital market theme. Now, when it comes to the risk in this particular segment, there are 2 or 3 big risks. Number one is the SEBI's tightening of the rules, regulatory norms, etc. This could have short-term impacts in this particular space. Second one could be that if we have a very, very long bear cycle, okay, we have been in a bear run for last couple of years or so now, right? And if we continue to remain in a bear run for another year, 2 or 3 or whatever, then there is of course going to be sentimental impact on people not doing SIPs, people reducing their SIPs, people not trading much, FNO rulings if they might change. That might also impact if the taxation goes up. These are all the risks in this particular sector. No sector is free of risk. There is nothing called as risk-free sector. Therefore, I really want you to understand this from an unbiased perspective. I've given you in the last 5 minutes or so unbiased commentary on this particular theme. I personally am convinced that this theme is likely to do well if you're a long-term investor. This is a mega trend that you should not be ignoring. Go and study this. I'm not saying go and blindly invest. Absolutely not. And so far, if you're liking this content, I request you to hit the like button. Let me know in the comments a simple thank you. And hit that subscribe button now so that you can continue to learn almost every week basis as I upload more and more videos. And if you want to join my YouTube exclusive community, then go to my channel, subscribe to the channel, and find the join button and be my guest. With that, let's go to theme number 2 now. The second mega trend is the energy trend in India. I created this video on my Hindi channel just 10 days back, giving a lot of comprehensive data-backed analysis on India's energy sector. You must watch that video if you are okay to listen to me in Hindi. But if you want me to recreate that video in English, then let me know in the comments. I'd be happy to do that if I get, let's say, 100 comments, right? But coming back to one key insight that I want to give you right now, which is International Energy Agency IEA sees that India is going to put around $170 billion in energy sector in 2026 in just 1 year. And when I did some maths, $170 billion come out to be around 16 lakh crore. I couldn't believe this number, to be honest. 16 lakh crore worth of investment in the energy sector in just 1 year, right? And if you look at the transmission capex, just the power transmission, forget about all other sectors of the energy, just the transmission sector capex is around 9 lakh crores. That's going to be up until 2032. It's a sunrising sector, definitely, no doubt. 500 gigawatt is the non-fossil capacity we are targeting by 2030. India's per capita power use as compared to the world's average is only 1/3. I feel like we're just getting started in the energy theme. Okay. But again, I'm not going to repeat all of that conversation that I did in this particular Hindi video. Request you to go and watch it. It's only 10 days. The data is very, very latest. 1 lakh people have watched it. If you're okay to listen to Hindi, then go and watch that video. Subscribe to my Hindi channel as well. But if you want me to recreate that in English, because maybe you are from the southern part of the India and you don't really understand Hindi, let me know. If I get sufficient comments, then I would definitely go and recreate this video with some more updates or latest information, right? So this is my second theme. I've explained the index funds. I've talked about the ETFs. Everything is in that particular video. I'm not going to repeat it in the interest of time. With that, let me move to trend number 3 now. The third mega trend I think is likely to play out in the next 10 years or so is the AI compute theme. I know immediately some of you might think that, oh, AI is likely to get crashed or corrected. I'm not talking about the price movements here. I'm not talking about the valuations here. I'm talking about the tailwinds. How much of money is being spent there? Okay. Now the small corrections, big corrections could happen. That is there. But AI is here to stay, if you ask me, for the next 5 to 10 years. It's not going to go anywhere. The spending in the AI might slow down a little bit. There might be short-term correction, okay? That is not denying. But the fact remains that AI is going to stay here. Why do I say that? Have a look at this here from a hyperscaler's growth perspective. How much of money companies like Google, Amazon, Microsoft, Meta, Oracle, they are pumping in. And this is hard money. This is real money, okay? FY26 estimates are around $691 billion. That's going to go up by around 29% next year. It's going to be around $892 billion. And the next year, $915 billion, almost going to be $1 trillion by just 5 companies. More and more companies are likely to join this from China, from elsewhere in the world, and that is likely to continue to boost the investment in this particular sector. Of course, there are concerns around whether this money will pay off, ROI is there or not, ROIC is there or not. Those are all legitimate questions. I'm not denying that, but I see that spending is happening as of now. Okay. Now, AI is a very, very big theme. I've tried to simplify here in the 4 layers of AI. Again, this is itself is a very, very big topic. I'm not going to go into details of it. But for example, first layer is silicon and design, where companies like NVIDIA, they are designing the chips, while companies like TSMC, which are the foundry, they are actually manufacturing these chips, right? Then you have second, which is physical infrastructure in the sense of data centers, power generation, etc. You have compute services, which is around hyperscalers, okay? Then you have applications and edge. Again, there are a lot of companies here that I'm not going to go into, but this is, you can take a screenshot of that and start to look at these stocks, start to study about these stocks. You would know how much of money is being circulated among these companies. Okay, it's a very, very vast ecosystem that has been developed. Again, price correction, valuation correction can happen anytime. You cannot deny that, right? Sometimes all of a sudden, if there is a big rally that is continuing, there will be some profit booking. You cannot deny that, but AI as a theme is likely to be there. It has been admitted by all the experts in the world. Nobody has said that AI is not going to be the tomorrow. Everybody has said that AI is going to be tomorrow. Of course, the valuations and price movement, nobody can predict it, right? So there could be a separate video detailing out all of these layers. Let me know if you would want to have that video. I'll try my best to create one more video if there are good comments on this video, if there is a good reaction on this video, right? Now, coming back to what sort of ETFs that you can explore here. Now, there are a lot of ETFs in this particular ecosystem based on these layers. Let me give you flavor of some of those live going to the Vested platform that I personally use, so that you can touch and feel what sort of ETFs are out there that you can go and study further. Let me give you a glimpse of all of that. So when you go to Vested, you will find an ETF called SMH. Look for SMH, which is a VanEck Semiconductor ETF. In this ETF, around $71 billion have already been invested. Expense ratio is at around 0.35%, but this one is very, very volatile. The beta of this one is 2.05. So it is highly, highly volatile. It can move 4-5% in a particular day up and down. So you really need to be very, very careful in terms of volatility. But if I talk about where does this particular ETF invest or take positions in, it's primarily the layer that I talked about, the first layer, which is silicon and design, which is the semiconductor chips. That is where it takes all its positions in. For example, companies like NVIDIA, TSMC, Broadcom, AMD, ASML, Micron Technology, all of these companies is sort of the target for this particular ETF. Okay, highly volatile ETF this is, and huge investments have been poured into this particular one. You can go and explore this one. Again, not a recommendation here. Second one, which is a little brother of this one, is SOX, SOXX. If you type that on Vested platform, you will find that one as well. Now, this one is a smaller ETF because if I look at the total assets, it's around $43 billion. Expense ratio is exactly same, 0.35%. And this is also very, very volatile. 2.32 is the beta that you can see here. From an exposure perspective, this is slightly more diversified, right? You will be able to see a bit more companies here, okay, that you can go and have a look. Again, go and have a look at the portfolio, what type of companies these ETFs have included, so that you get an understanding of which type of AI themes you are going to play out for and which are the things that you are avoiding. Okay, this is the second one that you can go and quickly explore. Third one, which is much more diversified, is an ETF called AIQ, which is Global X Artificial Intelligence and Technology ETF. Now, this one is much more diversified because it's going to go and look at all of these layers and look at any AI companies that it finds interesting. Okay, so it is not only going to stick to silicon and design sort of layer. Okay, now coming back to this particular ETF, it is a smaller ETF, $10 billion as you can see. Expense ratio is much higher, 0.68%. This is less volatile as compared to the previous two that I talked about. Beta is around 1.66, and you see the type of companies here. You will find all sorts of companies. You will find companies from hyperscalers like Microsoft, Oracle, etc., to even companies like Netflix, Amazon. Okay, NVIDIA is also there from a semicon perspective. Tesla, Intel, all of these companies you will find. So this is a much more diversified ETF as compared to the previous two, but you can go and explore this one as well, right? Now, there are a few other ETFs that you can take a screenshot of, these 5 to 6, go and study these ones at your end. I really cannot explain each of these to you. That itself will be a separate video. Again, if you want me to only create a video on AI related ETFs, then I can come back with a comprehensive, I don't know, top 10 ETFs in the AI ecosystem. In India, there are no AI related ETFs as of now. Okay, these are all US based ETFs, and if you want to open up your US Demat account, I'm personally using Vested. I've given you the link of Vested in description and in the pinned comments. If you use my link and open the account with Vested, and if you do your first fund transfer, you'll get a bonus of $10 from Vested after you add your funds. So you can go and explore that. I've given you the link in the description and in the pinned comment. So this is the third mega trend in my view that is likely to stay there for the next 5 to 10 years. And whenever there is a good correction, of course, you should go and explore in my view. Do your due diligence as well. Don't take blind bets and don't put all of your money into one theme. That is another important point I'll make, that I'm explaining to you these themes doesn't mean you go and pick one theme and put all your money. Never do that. Take some calculated bets only. That's how you go and diversify your portfolio. With that, let's move to theme number 4 now. But before I move to the fourth one, let me know in the comments, do you think that there is likely to be a sharper, deeper correction in the AI stocks or not? I would love to read your comment and your rationale behind it. Okay, so let me know in the comments while I move to mega trend number 4 now. Fourth mega trend in my view is defense sector in India, defense theme in India. Let me present to you only 3 data points so that I give you complete clarity. Okay, what you see on this chart is that between 2016 and 20, if you look at the total global imports or the defense imports rather, 9.3% of this was attributed to India. Okay, and it has dropped back to 8.2% between 2021 and 25. And you might say that, you know what, this is not a huge drop. Okay, but let me tell you other side of the picture, which is how much of defense we used to import earlier. Around 65 to 70% of our defense equipments we used to import earlier. That has flipped over its head, and now it has come to 65% we are producing in India. Okay, that's a massive shift in our defense. Okay, now if I talk about second data point, which is how much of defense production we are doing in India right now. FY26, the growth has been around 16% year-on-year basis. Around 1.78 lakh crores of defense production we have done in FY26, and by FY29, the estimates are that we are likely to cross well above 3 lakh crores of defense production. And where is this defense production going to be useful? Some of this will be useful for us in India, but we are also exporting a lot of defense. For example, here's the data point. In the last 5 years, our defense exports have gone up by around 260%. This is huge, okay? And by FY29, we are likely to hit the government's target, which is around 50,000 crores of defense export. So what is essentially happening in the last 3 data points that I showed you is that we are moving from a defense import country to a defense export country. We are doing a lot of defense production in-house now in India. Okay, of course, I'm not saying that we have become the world class in terms of the technology, etc. No, we don't have all of that, but we have started to export defense production. That itself is a big win from an investor's perspective. Now coming to tracking this particular sector. If you want to track this sector, go and read about Nifty Defense Index. Okay, there are 3 ETFs that you can go and explore as well. They are on your screen: Grow, Motilal Oswal, and Mirai Asset. Okay, none of these are recommendations. I've given you the market cap of these. I've given you the expense ratio of these 3 and tracking errors as well. Mirai Asset looks very high tracking error, 16.23. We just need to check this data point. There might be an error here, but I've also given you 3 months average volume, and from that perspective, Motilal Oswal seems to be trading in terms of the highest volume. Again, go and study these particular ETFs. One of the biggest risks right now from defense perspective that I see is the valuations. During the March 2026, everything fell down. Defense also fell down. Should have been a great opportunity. But again, right now the valuations have gone back up to where they were. It's all-time high. You always need some pullback before you can go and invest. But I've given you this sort of good commentary about why I feel defense sector is likely to do well in the next 5 to 10 years, because we are moving from import to export. That is one thing that you need to remember, right? With that, let me move to my 5 and the last mega trend that you need to understand. Each of these mega trends, I can spend hours and hours giving you more data points, but I think I'm trying to summarize you in the shorter format so that I can give you 5 mega trends in one simple video. But if you would like me to dig deeper into any of these segments, then of course, you're free to let me know in the comments, and like this video if you're liking this content, and subscribe to my channel. With that, let's go to number 5 now. Before I explain number 5 mega trend, I hope you are aware of my podcast channel Good to Great. There has been a lot of good content on that. For example, recently I put a podcast out there on gold. What's happening in gold? Another mega trend. I think you should not be affording to miss it out. Please go and watch that podcast and subscribe to that channel, because on that channel we are bringing some mind-boggling conversation around finance, business, career, health, and many other topics that you don't want to miss out on. Go to that channel. I've given you the link in the description and in the pinned comments. Subscribe to that channel so that you continue to learn not just the finance, but other mega trends across the streams, right? Now coming back to number 5, it is going to be hospital theme in India. Okay, why hospital themes? Okay, what you see on my screen is healthcare sector industry growth rate, and what you very clearly see here is that hospitals are likely to see around $266 billion of money flowing in this particular sector by FY 2028. And if you look at other segments of healthcare, for example, pharma, medical devices, diagnostic, they are not growing at a faster rate as compared to hospitals. And also, just to put this and why this is happening, very, very simple. For example, as of now, around 10% Indians are 60 plus. By 2050, it is likely to be 20%. We're likely to see more and more growing population in India as compared to where we are today. 101 million people are estimated to be diabetic in India, and 136 million people are pre-diabetic. Okay, 1.37 lakh crores of health insurance premiums have been written in FY26. It's growing at around 15% growth rate. And when people are taking more and more health insurance, what are they going to do? They're not going to pay from their own pocket. They're going to pay from insurance companies. And then they are likely to go and use the hospital facilities. Even if you look at some of the government policies, you will see massive investments. For example, 12.69 crore people have already used this particular policy by Prime Minister. And you see how much of money has been spent? Around 1.92 lakh crores. And in hospitals, if I look at the trend, where are the revenues coming from? They're coming from 3 factors: number of beds, then occupancy, how many beds are occupied, and number 3, what is the average revenue per occupied bed. If I talk about the bed capacity and how that is being added in India, FY23 51,000, FY26 70,000, FY30 1,08,000, meaning these beds are being added by almost every hospital you see in the next 5 years or so. Even very, very recently, Kotak published a particular report saying that 18% growth has been seen in the revenues of hospital chains. So there is likely to be continuous growth coming up in the top line of hospitals. There is one big risk in hospital segment right now. What is the risk? One of the panels in Rajya Sabha has said that we need to have a regulatory oversight on the pricing and control on the pricing of these hospitals. So there may be some regulatory interventions in the short term that might impact the profitability, that might impact the revenues of hospitals. And whenever that happens, the hospital segment is likely to fall down. In my view, if they fall down by around, 20%, 30%, these are great opportunities, because in my view, hospital theme is an ever-growing theme. Yes, regulatory risk is there. Therefore, do not invest in this particular theme when it is all-time high. There will be some panic moments whenever there is some policies being reviewed, policies coming up, their pricing is going to be capped. At that time, there will be a panic. Okay, that's what I would say. Again, I'm not saying that go and invest, go and study this particular theme. You're going to find this as a mega trend for the next 10 years or so. Now, coming to the indices, there is a nifty healthcare index that you can go and track. That is for the overall healthcare segment. But very, very recently, BSE launched an index called BSE Hospitals that you can see on my screen here. Only launched 3rd of October 2025. You can go and read about this particular index. But if I give you few glimpses here, for example, if I talk about what sort of hospitals have been included in that. So Max is there, Apollo is there, Fortis is there. You can see their allocations, etc. These are all hospitals. As of July 2026, if you look at the PE ratio of these hospitals, it's touching around 70. It's crazy in my view. Valuations are very, very high. This is the risk right now, which is that if the regulatory action happens on the hospital pricing, then there is likely to be a correction. Okay, in my view, because the valuations are very, very high as of now, 70. Okay. Now, if you look at the returns as of July 2026, last 1 year around 7%, 3 years 28%, back tested, 5 years back tested 29%, right? If you look at the volatility or the annualized risk is also very, very high here. Okay, you can see that data here as well. Overall, I would say hospital theme is a promising theme, but if there is some regulatory action, some government policy interventions comes into hospital, and if their prices are capped, then that could be a serious risk. But you know what? I don't know whether that is likely to happen or not. But whenever that happens, sharp correction is likely to happen. And as of now, this sector looks very, very good to me. It's going to be one of the mega trend in my view for the next 10 years or so. In this video, I've tried to give you a lot of information in, 20-25 minutes. I don't know how long it's been there, but try to cover a lot of grounds for you so that in one video, you get this clarity on what are likely to be 5 mega trends. Let me know in the comments which trend out of these 5 you are going to vote. I want you to give your vote. Number 1, number 2, number 3, number 4, number 5. Simply rank them in 1 to 5. 1 being the biggest mega theme or the trend for the next 10 years, and 5 being the lowest among these 5. I would really, really love to read your comments. I hope you enjoyed this video. I'm going to see you in my next video. Until then, keep rocking.